I now hand the conference over to Mr. Amey Chalke, Pharma Analyst at Haitong Securities. Thank you, and over to you, sir.
Thank you. Welcome all to Q3FY21 earnings call of Caplin Point Laboratories. From the management side, we have Mr. C.C. Parthiban, Chairman, Mr. Vivek Parthiban, CEO, Dr. Sridhar Ganeshan, Managing Director, Mr. Muralidharan, CFO, Mr. Satyanarayanan, Deputy CFO, and Mr. Vinod Kumar, Company Secretary. Over to you, Vivek.
Thank you, Amey. Hello and good evening, everyone. We're pleased to welcome you all to our earnings call for Q3 and our 9-month results. Please note that a copy of all our disclosures are available on the investor section of our website and as well as the stock exchanges. And also, please do note that anything said on this call which reflects our outlook for the future or which could be construed as a forward-looking statement must be reviewed in conjunction with the risks that the company faces. With that, I would like to hand over the floor to our chairman, Mr. Parthiban, to take it on.
Good evening, ladies and gentlemen. Welcome to our earnings call. At the outset, some of the key milestones of the past and present. Cash and cash equivalents stand at 426 crore as against the revenue of 796 crore. Here the cash is more than 50% of our revenue. Number two, cash flow from operations for the last 9 months stand at 223 crores as against 44 crore in the last year. Consistent growth in top line, EBITDA and bottom line. Caplin, a turnaround story, reaching the status of second position as a wealth creator in the last decade by selling simple generics and semi-regulated markets of South America, that too in a smaller geography. This news appeared in Economic Times on the 31st December 2020. And we also secured the position of 36th among the top formulation companies of India and 759th position among the 1,000 pharma companies of the world, as per Toraya's report. The above messages reflect how we perform as a mid-sized company compared to our peers. And then Caplin is a debt-free company, which you are aware, and there is no bad debts also in the market subsidiaries. Now the benchmarks of present and future. Caplin is on the cusp of significant change in creating a tech architecture. The CNBC TV has featured that Caplin as the number one company in India across all industries with regard to R&D spend as a percentage of revenue in the last 5 years. Today we have 2 API R&D and 2 formulation R&D and 1 CRO for clinical studies with close to 400 scientists working in our company. We have developed 25 to 30 unique injectables APIs, unique injectable APIs for the US market, which can also be sold in various other markets of the world. We are in discussion with an API company for acquiring the facility, failing which we will start our own API plant immediately. Our new API facility is not only for the injectables but also for OSD and oncology. We have already bought the land. I think it's 18 acres in a place called Terua Industrial Estate, which is next to our injectable plant. Our API R&D team has already identified close to 600 APIs, which we are planning to manufacture from the key starting material to API, which means we will not only manufacture the API, we will also manufacture the KSM and intermediates, which alone could prevent the dependence of external companies or countries. Our formulation injectable R&D has developed many simple and complex molecules which are in various stages of registration. Further, our oral solid dosage R&D has developed more than 100 products which are in various levels such as translations, filing and registration in several parts of South America. Our CRO is all set to file the document in February that will trigger inspection for US FDA and we are very positive that we would get our approval mostly in 6 months from now. Now, let us look at the various projects of future. We recently bought 4 ready-made buildings measuring 152,000 square feet, which came from an auction. These buildings were constructed by a pharmaceutical company, which became an NPA, subsequently went to surfacing. We already started the design drawings, and we are ready to go for an oncology plant for tablets, capsule, and injectables for regulated markets in this building. We are in fact sure of completing and starting the commercials in 18 months from now. We also have plans to go for OSD and the hormone plant for regulated markets, and the entire funding for our capex will be from our internal accruals. Now let me highlight the changes of capex in Caplin Sterile. The second line for liquid injectables is already on stream and the commercial started. Number 2, currently we have sufficient capacities for liquid injectables vials and ophthalmic production. And number 3, we already received the machineries for bags, which will be installed in the current year itself. Number 4, we will start our PFS sections and the second line of expansion for Lyo in 2022. And we also have plans to go for a dedicated line for emulsions in 2023. Once we complete the installation of all these segments, we'll probably one of the best company of our size to have many segments of injectables area, which will be instrumental for a mega growth in North and South America. Now let me highlight the major opportunities for future. We now have 2 legs of the pharmaceutical business. One is the business model differentiation in various markets, in the private market especially. The second one is the tech architecture to accentuate the positives to remain relevant and create a sustainable competitive advantage both in private and tender business like any other big company. The key starting materials to formulation will create a leg up for Caplin in tender business in many countries. As you know well, the tender business is very voluminous with more number of competitors. However, Caplin's end-to-end technology platform will create an advantage for many products in tenders. Further, the cash flow will continue in future, which will create advantage for our company for R&D to projects, both in terms of capex and opex. This will also attract and retain relevant human resources using our unique ESOP scheme. Now, let us look at the markets and registrations. Indian pharma exports to Latin America will increase by an impressive 23%, reaching $790 million in the first 8 months of April to November. This clearly shows the opportunity in our major market. We are increasing our registration in the current markets, not only for generics, but also for unique products for brand marketing. We're also expanding to bigger geographies such as Mexico, Brazil, South Africa, and others. Our first order from Mexico is being processed now. We have appointed people from India for brand marketing, but also as country heads to the new markets of Latin America. So in a nutshell, our future business will be based on the following. A, focus on the cash flow first with the consistency of growth in bottom and top line. B, add new revenue stream every year. C, keep cost under control while keeping an eye on quality, integrity, safety, and security. D, enrollment of key people for the next level. E, efficient allocation of capital for various projects, right from KSM to APA, and complex molecules for regulated market, and also fast-track registration to achieve the break-evens for the new projects. Finally, we'll also pull the plug when it's not making any sense. Thank you. Thanks to all of you.
Thank you. Should we open the floor for Q&A session now?
We'll just give a very brief update on the US business, and then we can open up the floor, please.
All right, you may proceed.
Yeah. So, as Chairman has indicated, I'll just give a little bit more in-depth details on Caplin Steroids, which is our US unregulated market business. We've been having some pleasant surprises in terms of approvals. In fact, when we conservatively earmark around 11 to 14 months per product for approval, we've had 3 approvals in very quick succession, one in 9 months, one in 10 months, and the other one, very surprisingly, in 6 months itself. So we've had 3 very quick approvals recently, and we are putting together plans to launch these products as soon as possible. So basically, in total, we have launched 7 products in the US so far, and then the next 5 to 6 products will be launched in the coming 3 to 4 months. Our capacity in our vial line 1 is running at a high level, and vial line 2, even though it is new, it is starting to get filled up with when it comes to capacity for both the commercial products and the exhibit batches. We are putting together plans to have the next 2 lines, as the Chairman had explained in his note. The other 2 lines are going to be 1 vial line with high lyophilization capacity, which will probably come on stream sometime next year. And then the following year, we are going to have a completely dedicated line for injectable emulsions. We are getting into good partnerships now for all the products that have been approved. Most of these partnerships are long-term, and also they are designed in such a way that it does not restrict Caplin from launching our own label in the markets if and when we decide to do so. When it comes to market share for the products where we are present for more than 2 years, we're at about 7 to 10% on an average, 7% for products where there are more than 8 or 9 competitors, 10 and above for products where we have about 5 or less. Of course, we would like that to be at least 10 to 12% for all the products overall, and we are working towards that with our partners. Going forward, starting from this year itself, most of the products that we will be filing will have some amount of complexity involved, because we have completed most of our products which were considered as simple solutions. Now we are getting into the complex products. It could be emulsions, it could be suspensions, and it could be products that are difficult to manufacture also. We are going to be filing our first 3 ophthalmic products by Q2, Q3 of this year. And we are also making good progress when it comes to non-US markets. We've already signed up a partnership with Jam Pharmaceuticals for Canada, and we're in advanced discussions with companies for entry into South Africa, Brazil, and Australia within the next few months, partnerships that I'm talking about. When it comes to revenues, this year we have seen that there is a significant increase in terms of product revenue, which is understandable considering we've been launching products in the markets, and there is a little bit of a reduction in terms of milestone revenue. But going forward, this will be the case because our more significant revenues will be coming from product launches and product supply, and milestones will start to reduce, but will be replaced by what we call a profit share, because almost all of the partnerships that we are having right now, we are doing a profit share where the net profit will be shared with us from the front end. That's it for now. I'm sure there are people waiting with questions, so we can open up the floor for questions right now, please.
Thank you very much. We will now begin with the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Anyone who would like to ask a question, please press star and 1 at this time. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Shrikant Akolkar from Ashika Stock Broking. Please go ahead.
Hi, good evening. Just wanted to get some clarity on the tender order that we have received. So if you can clarify when does it commence and the kind of margin profile that we will have.
I request Chairman to take this question, please.
Yeah. There are emergency tenders now in Central America. The emergency tenders are related to COVID-19 issues, which of course you are aware. We received actually the tenders, maybe like last 6 months it has been happening, half of which we have already completed, and the rest of it, of course, will go in the last quarter of actually this year. The margins are very good. The reason being, it's not easy for any company, any and every company can export these products, as there is actually a huge shortage of raw materials. Some of them have to be imported from the neighboring countries, and some of them actually is in the form of shortage of containers. That also creates a lot of issues. But the advantage that we have is we already have stocks closer to the customers, which you are aware, because ours is a stock and sale model. So that creates an opportunity for us to cater to the market without much ado.
Okay. And sir, how much of that tender would we already have completed so far?
5.5. Yeah, please.
I would.
Yes.
Yeah. So there's been continuous tenders coming through. This 10 million that we have spoken about was received only in the last month and a half, and we are going to start supplying. It will be supplied over the current quarter and the next quarter.
Okay, understood. And the other question is on the U.S. revenue. So I think U.S. revenue this 9 months would have been around 65 to 66 crore, and we have guided up 100 crore revenue in this fiscal. So where do we think that we will end up 100 crore, or we can go ahead more than 100 crore this year?
Okay, so we have completed revenues close to 60. We're not at 60 at this moment. We're at about, I think, 54, 55 right now. We are confident. We expect to finish the year close to 100. I'm not sure if we will cross 100. We'll have to take into account that there's been significant delays in the man and material movement between the months of April to October, which sort of delayed some of our qualification and launches in the market. I will not call this mixed revenues. These are shifting of revenues from current year to potentially next year. I think even if we finish it at 1995, it still represents about 50-55% increase over last year, which is good. And the other thing to take into consideration is there is a big shift upwards in terms of product revenue, which is what is long-lasting, which is what is more predictable in the market.
Okay. One more question, and then I will join back the queue. So now we are doing about 300 crore of capex over the next 30 months. So just wanted to understand about the free cash flow expectations over the next 3 years.
Yeah, I'd like Chairman to take this answer, please.
Yeah. The project that we are planning, as I told you before, is all actually products. The product that we are going to manufacture from the projects such as oncology and others are products which have very good demand in the market. And to be very honest with you, we will also not make the mistakes which we have done actually in Caplin Sterols, in the sense we commissioned the plant and we were not in a position to attract the R&D talent when we went for our Caplin Sterols plant. Whereas today, our company is also visible and we also go for the ESOP to attract the talent. So on one side, we are commissioning the plant. On the other side, we have already developed some of the products, and we are using actually a third-party manufacturer to file the registration. So by the time when we start our commissions, we would have completed some of the registration, and we will only ship actually from other factory to our factory, which means we are very sure of achieving the break even without much actually difficulties. So we are sure that we will be in a position to maintain the current ratios. We are very sure for the next 2 years. After that, starting from 2023 and 2024, we expect a mega growth actually for Caplin Point.
So we can deliver the free cash flows even after 300 crore capex over the next 3 years.
Yes, we are sure of
Okay.
actually a cash flow. It may be little higher or lower. That of course,
Okay.
that we'll have to wait and see. What is important, our focus will be more on cash flow. But at the same time, when we start investing more and more in the facility, it may be slightly lesser, but we'll never go for borrowing. It will be only from the internal accruals. Any project that we do here on, it will be only from the internal accruals. So whether we achieve the same level or slightly lesser, it's not going to affect actually the company's future.
Okay, understood. I will join back the queue. Thank you.
Thank you very much.
Thank you. The next question is from the line of Sonia Lalwani from Pareto Capital. Please go ahead.
Hello. Thank you for the opportunity, sir. So my first question, so I have a few questions. First question is, company, you have been alluding to new product launches post 2 to 3 years, focus on tender business, proportion of branded business getting increased, and even injectables to LATAM. So given that Caplin has considerable understanding of LATAM markets, how much incremental growth we can expect from all these initiatives in the LATAM markets in next 2 to 3 years time frame? If you can quantify some of these initiatives.
Okay, I'll take this call. See, there are three business that you have mentioned. One is the tender business, brand business, and injectables.
Yes.
All this involves time. As you know well, when we get into larger markets, the entry barriers are quite high. The registration takes its own time. Then coming to brand marketing also, whether it's brand marketing in India or overseas, it takes its own time. And then coming to injectables, the business that we are going to do for injectable is more of institutional selling. That, of course, will be in a position to achieve short and medium actually opportunities. However, we are sure that we'll be able to maintain the current growth ratio. The CAGR will be the same or slightly higher. But to quantify in numbers is not that easy, as we are not in a position to start the brand marketing as of now. At the same time, tenders also, it's happening now. It's more of actually emergency tenders. And we will continue to do well in spite of actually COVID is slowly coming out, slowly flat, the curve is flattening. We will be able to do it because of the fact there will be a lot of traffic, there will be a lot of congestion in ports, and then containers have not been in a position to get it on time also. But company like us, we always keep goods next to the customer, as I told you before.
Mm-hmm.
Any point of time, we will have goods more than 150 crores in all these places. By the time, we arrange the container, we always, we have goods to sell. So the sales will not be affected, the ratios will be maintained. Phenomenal growth, as I told you before, will start only after 2023. And moreover, paying 2,000-3,000 extra or even 5,000 extra for a container is not much important to us. To us, the cost of opportunity is much more important than the cost of a container, because we are sure of selling at a higher price because of the stock and scale model. Suppose when you sell to an importer, the importer will take the goods from various manufacturers. But when we sell to the customer, we will watch the situation and then decide when to sell and how to sell at a higher cost. These are the few things which I think, probably will convince you to understand our business model.
Yes, sir. Surely. Thank you so much. Second question that I have is on the US injectables business. So I think Mr. Muralidharan can just give numbers on what the asset turnover could be on the new capacity that is coming up, and what is the expected timeline for achieving this kind of asset turnover, and also whether regulatory approvals have been in place for this new capacity.
I will just answer the second part of the question. So As per FDA guidelines, if you're adding an additional vial line, in our case it's a vial line, right? So when you're adding an additional vial line, as long as it is under the same building, under the same quality system, and they call it the FEI number, Facility Establishment number, as long as it's under the same quality system, then it is only an annually reportable change. So we'll need to just inform FDA that we have added another line, so it doesn't require a new inspection. On the asset turnover, I'll request our CFO to answer, please.
Yeah, good afternoon. This is Muralidharan. Asset turnover ratio, actually it will be more practical if you see 2-3 years hence, because you have just invested and then the current year turnover, as Mr. Vivek put it, it will be about 100 crores, 95 crores, which means it will be about 1:1. Going forward, without much addition to the capacity, we should be able to do 3x kind of a turnover with the capacity what we have today. And it's an ongoing exercise. Next year also we plan capacity enhancement. And then 3 years from now, definitely it will be 3x will be the asset turnover.
Okay, so you are saying for the short term, it's kind of 1:1, and maybe for the longer term, it can go up to 3x.
Yes, it's the medium term. Yeah.
In the medium term. Okay. And so when can we achieve this kind of asset turnover? Like, what will be the break-even point?
We feel that from a cash flow break-even angle, according to our estimates, we feel that it should be anywhere around 120 to 130 crores. We're not far away from that, right? I mean, we expected to achieve that this year, but because of some disruptions due to COVID, we were not able to do it, but we're not far. We feel that next year it should be very much possible.
Yeah, I'd just like to supplement that what Mr. Vivek said. The break-even year, actually when we take the expenses, we charge off all the R&D related expenses and the filing expenses, which many companies have different viewpoints and then they give different treatment. But conservatively, we are charging off the A&D related expenses and the product development expenses, which has been going as our chairman put it. We are the largest. We spend the largest in India as a percentage of turnover. So the break-even is a misnomer here because we concentrate more on building the more products, and then so that 2 years, 3 years, and hence we should be in a position to take a leap from. Yeah, that's the point. So break-even now for the next 2-3 years. What Mr. Vivek meant was excluding the R&D related and filing related. If you were to see as a commercial operation, it will break even at the current turnover.
Okay, all right, got it. Thank you. So as third question, like if you can just if you can just tell about how much revenue we can achieve from 4 ANDAs that will be launched in the next 2 months, like a ballpark figure as to what could be the potential revenue.
Yeah, so of course we don't want to get into numbers at this stage, right? So even though this is very short term, what we do give out is addressable market size of the product when as and when we have the ANDA approved. We are working with very high level partners. In fact, some of our partners are the largest companies in the US, and they will do justice to the product. We are very sure of that. So we would like to look at it from an overall revenue angle rather than on a product to product kind of a basis, because as you might already know, there is intense competition in the US. There's no doubt about it. Even though injectables there's lesser competition compared to orals, there is still significant competitive landscape in the US right now. But from an overall perspective, I think we will comfortably beat this year's revenue when it comes next year. And as always, our target is to achieve at least 10 to 15% market share each time we launch a product. So you could sort of take that as a guidance.
Thank you. I would request Mr. Alvani to rejoin the queue for follow-up questions.
Okay.
The next question is from the line of Sachin Kasera from Swans Investments. Please go ahead.
Yeah, hi, man. This question is for Vivek on the US operations. So you mentioned that this year, because of the COVID-related issues, we were not able to achieve the planned budget. So because of the lower base now, have you also revised the FY 2023 budget downwards, or we remain hopeful of achieving the 22 budget and 23 budget also?
Yeah. So when it comes to product approvals, we have not faced any delays, thankfully. When it comes to product filings, there's been probably a few months delays with a couple of projects. I would not say it's directly related. It's not linearly related, I would say. But yes, compared to what we have done this year, I would say that we will very comfortably beat the revenues next year. And that's about it. Like I said, when it comes to product approvals, as you might have seen, we already have 12 approvals now, 8 under Caplin's name and 4 with our partner's name. So I don't expect a slowdown in revenues or anything like that.
Can we expect a significant jump in FY22?
We'll have to wait and see. We are hopeful. We are confident that we will do well, but a significant jump, I don't know how you would quantify a significant jump, but we will do well.
150 crores? Yeah. 150 crores plus next year.
We are still not comfortable to get into numbers, Sachin.
Sure.
Our break-even point is about 120 to 130 crores. That is our 130, I would say, and that would be a milestone that we would attempt to achieve for sure.
Sure. My second question was on the capex that has been presented in today's results of around 275-300 crores. So can you tell us what is going to be the peak revenue and what is the type of payback that you are looking from this project at full utilization?
Yeah, I'll Chairman to take the call. Yeah.
One thing which is very important, as I told you before, not only completion of the facility, it's also completion of the registration, which really gives you the business, as you know well. So we need at least minimum of actually 3 years. In 3 years, we are very sure actually that we will be on the fast track. That is for sure. But however, it will not be in the form of actually all the factories that we are planning to, all the divisions which we are planning to start. We will start the commercial production after 3 years. Some will start after 2 years also. So we are likely to do well, as I told you before, starting from 2023. So this period for Caplin will start from 2023 onwards. That's how I would like to put it.
So that's understood. That's, I think, something you mentioned, but my question is a little different. With this investment of 275 to 300 crores, can we generate additional, say, 1,000 crores, 800 crores? What is the type of incremental revenue that can come to the company?
It is, yeah, that's so. You're very right, because we are sure of reaching actually that kind of revenues. 1,000 to 1,500 crores of revenues is definitely possible, in addition to what we are doing now. That is for sure. On top of it, what we exactly emphasize and what we focus is actually the cash flow. In 3 to 4 years' time, we expect a phenomenal cash flow again. Which means, even if our concern is not the top line, to be very honest with you. We always focus on the cash flow. Because top line is vanity, bottom line is sanity, cash is the king. If you look at other companies of our size, then you will be able to understand that I'm sure that you will say, there are not many peers who are of our size having this type of cash flows. We will continue to have the cash flow. This will actually double and quadruple actually in 3-4 years from now.
Sure. My last question
that's the most important point, I think, more than the top line. Am I right, sir?
So my last question was on the API. You mentioned that you are working on acquisition. So is it that we are in some final stages and we are it could happen soon, or is it at some very preliminary stage, the acquisition for the API plant?
No, it's somewhere halfway through, and we will take a decision by end of this February. And we will not be waiting in the wings, because we already waited, to be very honest with you. We'll start our construction actually starting from March. It has come to say 50-60%, is covered. Still, we won't say, we have come to a stage where we are in a position to understand the whole actually infrastructure and other things. More than the infrastructure and other things, we don't know how many competitors are in the fray also. To be very honest with you, this is a facility of a multinational company. So we will wait only up to February end. That's what we have decided. trailing which we will go for our own API facility.
Thank you so much, sir, and wish you all the best.
Thank you, sir. Thank you very much.
Thank you.
Thank you. The next question is from the line of Mitesh Shah from ICICI Direct. Please go ahead.
Thanks for taking my questions and the congratulations for the good set of number. I just have one question. Your expansion on the Latin America was delayed because of the COVID travel restriction. So what is the current position and when we can see the ramp up in the Latin American market?
Extension in the sense, the registration is on. The only thing, there is one market which I consider as the best market because I have traveled to this particular market several times, that is Mexico. The business already started. However, there is a market which we know when we get into it, we will be able to create a niche in that particular area. So that's one thing I would say is delayed because I have not been in a position to travel. But the advantage that we have today, unlike other companies of our size, we have people, working to the tune of 500 to 600 subsidiaries. So they have been working actually continuously even during COVID time. On top of it, my son who lives in this part of the world, actually he is taking care of the marketing also along with the professionals. The delay with regard to the new geographies, yes, it has happened. Not in the current market or not in the form of increasing the registration in the current business markets. It has happened only in the bigger geographies. And hopefully, it will be over in the next 3 to 6 months' time, maximum. The day we find the effective vaccines, we'll be there in the market.
So which major market are you looking? Mexico and which other markets are you looking?
To me, it's Mexico. Brazil is definitely the biggest market. But at the end of the day, where we are in a position to generate more revenue is the biggest market to us. Am I right? Because Brazil maybe is one of the best markets. It's true, the biggest market. But for us, it's definitely possible and definitely better than other markets in the sense that we will be able to generate more revenue, more cash flow while getting into Mexico.
About the US injectables, are you planning to leverage this Latin American markets with the injectables portfolio you have in the US, or it's a totally separate business?
The injectables, as I told you before, actually, the injectables that we developed or we are filing in the US markets can be also used as a global dossier in various other markets. We are sure of using it in Mexico and Brazil.
So are you starting taking approvals of the plant for other markets as well, like Brazil?
Yeah. What is happening is in the form of desktop registration currently. The Ministry of Health is aware of the fact that we will not be able to travel, hence they allow desktop registration, and it is in the offing. It has been happening. And our regulatory team is working with various countries that way. It is happening. It is slow, but however, it's happening.
Okay. And can you give the capex for FY21 current till 9 months FY21 and FY22 capex?
I request our CFO to just throw some light on the capex for the last 9 months.
Last 9 months, the capex is about 66 crores.
Okay. What about the FY21 full year are you expecting and the FY22?
Yeah. I think I will take this question. We are sure of actually increasing the capex as we have decided to go on full swing. Between 100 to 150 crore will be spent in 12 to 18 months' time.
Okay, that includes the inorganic opportunity you are looking, or
if that happens, as you rightly put it, if that happens, it will be much more.
Okay. And what size are you looking at an opportunity, inorganic opportunity?
More than the size, we are not very keen on the top line of some company, to put it very straight. We want to see whether we'll be in a position to launch our APIs in the US market. That's our first priority. Second, are we in a position to go for actually some of the APIs which can be used in our current formulation business of South America? So if that particular company is doing good business in some areas, that also makes sense. But to us, the first priority is to see whether it's going to be a meaningful fit for our own products. If that suits to us, then we'll go for it. Otherwise, even if it is like a company which is doing very good business, we may not be in a position. We're not very keen to go for that one.
Okay. Okay. Thanks a lot.
Thank you very much. Thank you very much.
Thank you. The next question is from the line of Sonia Lalwani from Pareto Capital. Please go ahead.
Thank you so much, sir, for allowing the follow-up. I have two more questions. So you are saying that premix injectable bag line will be ready for installation, and even the pre-filled syringe line will be added. So if you can throw some light on what is the market potential for us in the market for this.
Yeah. The premix bag is a very specialized area, and this is something that will very few people in India manufacture. To my knowledge, not more than 3 or 4 companies manufacture this product. And this is a concept which is, quite strictly followed in the US. Basically, they are expecting the number of steps that a healthcare worker takes to reduce. Like previously, if a product is available in a vial, they need to draw it out of the vial and then inject it into an infusion bag. So rather than that, we have the entire bag itself pre-mixed with the drug already. So this obviously will, we can charge a premium in the market, and I feel that the number of products is probably to the tune of about 25, 26 at this point in our target list. But you can always convert a lot of products that is in a concentrated solution right now into a premix bag also. We call that in the US as 505(b)(2) filings. So we feel that it's an attractive, it's definitely a lucrative market, and the technology involved is a little bit complex. So I don't expect too many competitors as well in this field. When it comes to pre-filled syringes, this is a direct extension of our current portfolio. In terms of the product development wise, we are looking at very similar kinds of timelines, very similar kinds of costs as well. And there are a few products where we might not be going for very high volume kind of PFS, such as the heparins and the enoxaparins, because you need to be completely integrated for that one. We are looking at a little bit more niche, high value kind of products in this space.
Okay. So margins would be higher than the company average margins, or would be in line with the company's average margin, a better margin?
See, today in the US, if you take out the expenses that we are incurring in terms of R&D, as our CFO was saying, we are actually at a decent margin level. It's in line with the company's overall margin. And once we get up in terms of revenues, once we go up to double the current revenues, probably triple the current revenues in the next few years, the linearity of expenses going up is not there, right? So you're going to have a baseline of revenues which will only go up incrementally as the revenues go, continue to grow well. So our bottom line is only going to strengthen from here on. We are at the worst level when it comes to margins today. And if you look at gross margins, we are still up to about 50% or more. So I expect the margins, which are already pretty decent, I expect this to grow up well.
Okay. Sir, any therapies that you are looking for in premixed injectable bag, or so just trying to understand the revenue potential from this category?
Yeah, so premix bags are predominantly used in hospitals and clinics, right? So, and of course, injectables by and large, 99% of them go through the hospital channel. And premix bags are also in the same area. Now, we'll need to be a little bit selective with regards to product selection, right? Because what happens is, if you're going for very high volume kind of products, this is not something that is going to work out because of the freight cost. It's very expensive to transport large volumes, especially if they call it transporting water on water, right? So we don't want to do that. We want to go for slightly more niche products. In fact, a couple of products that we already have in the market in terms of a vial we want to extend that into a pre-filled, pre-mixed bag as well. So as it stands today, if you compare the profitability between a vial and a pre-mixed bag, it's already multiple times more profitable in a bag. So yeah, the revenue potential is good, but product selection we need to be a little choosy as well.
Okay, got it. Second question is on the margin expansion that we can expect from the backward integration of APIs that we are currently doing. So if you can throw some light on what is the potential for our margin expansions from this?
Okay, I will take this question. If you look at most of the big companies, they are all into backward integration, forward integration, and then that's how only they are in a position to actually make things happen. One is their margins are good because they control their key starting material, intermediates, API, and then they have their own CRO to do this BBA studies, everything. So that's exactly in the one which we are planning to do also. So we are also sure that we will be in a position to improve our margins, because this is not something actually which is a path which has not been taken, which is not a new one, which is already actually a path which big players have already gone into it. So we're very sure of the margins.
Yeah. In addition to what Sharon was saying on the backward integration, especially for US, margin is one part of it. Definitely, you will see an expansion in margins, because typically what happens with injectable API is, because it's small volume, we are forced to buy at high prices from third-party manufacturers. So when it's your own, it's obviously cheaper, number one. But more than that, the continuity of supply is very, very important in this field, because for most of the generic injectables, if someone is selling at $1, and then if you're cutting the price down to 80 cents, that really doesn't move the needle for a front end, let's say a hospital or a GPO or any other wholesale buyer. What they're more interested in is, if they sign a contract with this person, will you be able to continue supply for the next 3 to 4 years? Now, when you go with a package that says that you're also the API manufacturer and you're also the formulation manufacturer, that gives them a lot more confidence to sign up with a party like us, which is what many of the large companies are doing, where for products that they are strong in and products where they have continuity, they almost always have backward integrated API.
All right, perfect, sir, perfect, got it. Also, if I can just squeeze in one more question.
Please.
Yeah, so could you talk a bit upon CRO leg of the company in terms of its significance in say in the overall revenues or of the company? If you can just speak more about that.
Okay. The CRO business is mainly for our own actually internal use. I would like to highlight actually the importance of CRO like this. There is a country is considered as the second largest market for Indian companies in Latin America. Most of the OSDs which are in the tender in that particular country, one has to go for BBA studies. For example, I don't want to mention the name of a company, but there is one company which participated in the last tender for one product. The name of the product is atorvastatin. They got it actually for the one product. Actually, they got a business of 40-45 crores. So the purpose of going for BBA studies and the purpose of going for the API is to add value to our product and get into tenders, so that the volumes and the value will be both actually high.
Okay. Got it. So it's basically to support the existing products of the company.
Exactly.
Okay, sir, that's it from my side. Thank you so much.
Thank you very much. Thank you.
Thank you. The next question is from the line of Shrikant Akolkar from Ashika Stock Broking. Please go ahead.
Hi, thanks for giving me opportunity again. Just wanted to understand, now we are pouring in Mexico. So is there any possibility of you sharing the kind of opportunity and when the operations are going to start?
Okay. Mexico is one country where the registrations are like any other bigger geography. But the advantage that we have today, my elder son went to Harvard actually for a course called the YP. What is the course, Vivek?
OPM.
opium. Both of them went to that one. Some of his classmates in Mexico, they have facilities in Mexico. These are people who are not in a position to sell the products very effectively. For example, the API which they choose seem to be expensive. They go for actually clinical studies to some of the CROs where they charge them very high. Because this is the one country where, if you have to do BBA studies, you have to do it in Mexico itself. We have a plan to go for our own CRO in Mexico. When we go for a CRO in Mexico, we don't have to do actually the entire bioanalyticals also in Mexico. We can have the bioanalyticals in Chennai, and we'll go for only the clinicals there. So the same way, when we go for our own APIs, we'll also go for APIs of products for which the formulation is already available. I don't have to register the product. And when we discussed with this gentleman, he himself told me that I have not been in a position to make money in these few products. If you can show me the value add by way of actually supplying API, by way of doing actually BBA studies for him, then that becomes an opportunity not only for us, also for him. It is a win-win situation. That will give us an advantage of not completing the registration. We don't have to wait for the registration to be completed. So this is one of the biggest advantage that we have as a company. Second, we also know some of the methodologies, which of course I don't want to disclose everything at this juncture. I'm sorry to say disclosing everything will lead to self-victimization. So for business reason, I don't want to discuss other things. We are very confident and we are very sure that we will become a force to reckon with when we enter Mexico. What is important at the end of the day is an effective action, and we will travel there and we will do our business very shortly.
Okay. Another question is on the operating expenses in the US. So if we can get the 9-month expenses and the recent quarter expenses, operating expenses that we have incurred in the US.
The expense level is pretty much the same as what it was last year, Srikant. There was a little bit of a dip, I would say, in the first quarter and probably second quarter also. But the expense level remains the same. From here on, it may marginally go up in terms of fuel and power expenses because we are running 3 lines if you consider the ophthalmic line as well. But I would say it is a marginal increase. It will not be a huge increase compared to last year.
Is it possible to quantify the current number as a last quarter number?
Of course, I think our CFO or deputy CFO, one of them, can throw some light if they have the numbers ready on hand. Okay.
Okay, I will take it offline. Thank you so much. All the best.
Thank you.
Thank you. The next question is from the line of Dhiral Shah from Phillip Capital. Please go ahead.
Yeah, good evening, sir. Thanks for the opportunity. So, out of the overall Latin American revenue, if you can segregate how much we have derived the revenue from the newer geography, which we have recently entered?
Newer geography, the revenue from the newer geography has not been extraordinary. And the revenue that we get maximum is from the existing markets because of the fact, one, the number of registrations have been increased. Number two, COVID also induced actually and created an opportunity in the form of emergency tenders. The newer geography, yes, we are getting business from various countries in the form of Chile, Peru, and Colombia. And the Mexican business just started. But it's the exact numbers I don't have offhand. I will not be able to tell you. Probably maybe 10 to 15%. It will be in the region of 10 to 15%. It will not be more than that.
Okay, so what is your this quarter we have seen a sharp improvement in gross margin, but somehow it has not been reflected in the EBITDA margin improvement.
I would request our CFO to answer to this question.
Yeah, a couple of things have contributed to that. If you see the operating expenses, about 6.6 crores is an increase in operating expenses in the current quarter. This is predominantly contributed by R&D, so increase in R&D expenses and also one of annual site fees, facility fees, which we pay from the US FDA, which is about 2.5 crores. The rest is all R&D expense increase is there. So that is the reason why the EBITDA margin, even though there's an increase in contribution margin, it is not flowing down.
Okay, so can we expect this 25 crore kind of a run rate for employee cost?
Sorry, I didn't get your question properly. Can you repeat it?
Sir, can we expect this 25 crore kind of a run rate for employee cost, as we have seen sharp rise in YOY?
Year on year, we have already explained in the previous quarter's calls as well. This is because the subsidiaries in the Latin American countries have come into fold only during this year. The major one is the Guatemala entity, which has come from 1st of April. And as I also mentioned in the last call, there will be increases for two reasons. One, the nominal increases what is being offered to the existing employees, and also we are adding people in the research and development and so on and so forth. The large organization is looking at future projects, so that will be there. But it will be in tandem with the revenue growth. Actually, it will not, as a percentage of revenue, we don't expect any major increase in terms of employee cost.
Okay. And sir, lastly, how is the competitive intensity in the US injectable business?
Yeah, I think when it comes to pricing, I have not seen much erosion in the products where we are operating in. In fact, in a couple of products, the prices seem to have increased a lot. That is also because the prices were already at a very competitive space. It was one of the late entrants as well, right? So that way, I don't see too much in way of pricing. But at the same time, the faster the approvals come through, it is a double-edged sword, right? You're able to launch, and then your competitors are also able to launch. That is also the case. But at the same time, we don't consider very large companies as our competitors in the market. So what is very thin gross margins to a very large player might be very decent margins for us, because our overheads will remain at a certain stage, whereas companies that have 5, 6, 7 plants all dedicated to the US could be looking at margins in a different way. So as a late entrant, we are still a small player. We can still create carve-out niche in the market. Yes, it is competitive, but I think there is enough room. Yes.
Okay. And so lastly, our other income was sharply down on a YOY basis. Any reason for that?
Yeah, CFO will answer that.
The corresponding period, we had a huge exchange gain, 10.75 crores to be precise. As you know, the INR has appreciated during the current year, and it is negative 1.15. In effect, there is a 12 crore drop, 12.25 crore drop precisely in the other income. That is the reason.
Okay. Got it, sir. That's it from my side. Thank you so much, sir.
Thank you. Thank you very much.
Thank you. Ladies and gentlemen, due to time constraints, was the last question. I now hand the conference over to Mr. Vivek Parthiban for closing comments.
Thank you. Thanks everyone for participating. Thanks Amey and the team at Chorus and Haitham Securities for hosting the call and your continued support for our company. And we hope to connect with some other people if they have some follow-on questions. And I hope everyone stays safe as well. Thank you very much, please.
Thank you. Thanks to Anand. Thank you very much.
Thank you. On behalf of Haitham Securities and Caplin Point Laboratories, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.